What is going on, guys? We have a lot of earning coming out today. Very, very important stocks. We'll be talking about Spotify, PayPal, UPS, UNH, and we have a lot of big news, potential Russia sanction, and other important news regarding trade deals. So let's get started. So let's start it with UNH. So the stock's been down a lot year to date, but we still have a lot of headwind in the entire healthcare and health insurance sector as a whole. So let's take a look at the UNH earnings Q2 2025. So the revenue came in slightly above expectation, 111 billion. But the EPS miss $4.08 versus expected of $4.45. And the medical care ratio is 89.4%. And the full year 25 guidance is 445.5 billion to 448 billion, missing the estimate of 449 billion. The EPS is at $16, missing the expectation of $20.9. The GAAP EPS is $14.65, and the operating earning is 21 to 22 billion. Medical cost ratio is 89.25. Operating cost ratio is 12.75%. United Healthcare has a big miss on the earnings from operations, is 2.1 billion, down 48% year over year. The operating margin is 2.4% versus 5.4% year over year. So we still have a lot of headwinds because of the new rules and regulations in the healthcare sector. However, I do find the current valuation of UNH very attractive, despite all of these headwinds, because we have calmed down quite a lot. So if we take a look at the stock price of UNH, so if we take a look at the daily chart, so we came all the way from $600 high to $261. So this is from April. April high was $600. So we have basically a 60% retracement from the top. The low in May was $248, and today the low was $260. So if we can hold this level around 250 and we can hold this double bottom and fill this gap, hopefully we can see more upside from here, because this is going on for a long time now. The sentiment wise, it's becoming very, very bearish, and especially after this earning, as it's basically a horrible earnings, but it's still holding the lows. So it's holding to 60 level. So I'm not too pessimistic about UNH at this level. If any investor wanted to sell, they've probably already sold already. If you're still holding, I don't think anybody is selling at this level. 250 is a very strong support. So basically, you can see here we have a very big consolidation area around basically from 200 to like 280 area. So hopefully it can stop bleeding somewhere around this area. So I think 250 is a very strong support for UNH. And let's talk about UPS. So UPS also had it was okay. Slight beat on the earnings, slight miss on the EPS, basically a 2 cent miss. However, the guidance, they didn't give revenue guidance or EPS guidance, I believe. They gave a guidance of car CapEx. I don't know why they're giving that guidance of CapEx, but not no revenue guidance. This could be another warning sign for the entire economy. If you look at the UPS right here, so if you look at the daily chart, UPS has come from the high of in 2022, $233 all the way back to $90 today. So it's barely holding the low of $90. It's down 10% today. This is a very, very weird situation because we are currently seeing all-time highs on the QQQs and SPY, but you don't feel like a bull market if you look at UPS. So typically when you are in a typical bull market, like stocks like UPS should do very well. Um, because you're expecting the economy is expanding and people are making more purchase and we should expect more deliveries from all across the country. But it doesn't seem like the case. UPS is trading at the 52-week low, which is not good. We see a lot of like US domestic revenue is actually down 0.8% year over year. That's also very concerning. The international revenue up 2.6% was very mediocre. And supply chain solution, the revenue's down 18% year over year. These are really bad numbers across the board. Uh, I think one of the major impact for UPS is the increasing labor cost regarding to the earnings, and you can see it from the EPS. But this is not a good sign overall for a typical bull market. Companies like UPS or FedEx should not be trading at 52-week low. So that's my opinion. And we look at Spotify. So Spotify have a slight miss on the revenue and a big miss on EPS. So the EPS was actually negative 42 cents of euro versus estimate of positive 2 euros. So that's a huge miss from positive 2 euro to negative 42 cents of euro. And we see the Q3 guidance, the revenues also miss at 4.2 billion versus estimate of 4.48 billion. I think also the management mentioned the ads business is slowing down. Um, I think this is also a very major warning sign if the business is cutting back on ad spending. I know Spotify is not the largest advertiser in the world, but it's very, very meaningful. We see a very meaningful decline um, in the EPS and revenue. This market is getting tough. Again, I would not expect a number like this from Spotify in a typical bull market. So we have to be very careful of what kind of bull market we are in. I think a lot of the market gain is really led by a very small amount of stocks like the AI companies and the energy companies and the semiconductor companies, but a lot of the retail companies are doing really, really bad. Like if you look at Starbucks, you look at McDonald's, you look at the Nike or Lululemon or these retail stocks are doing terrible. I wanted to be very, very cautious about this. Royal Caribbean also reported earning. Yeah, Royal Caribbean's doing okay. I think mainly because the Caribbean customers are more like older people. They have more time, they have more money in their pocket, and then they can travel. They will have less impact in terms of employment and because they have like pension and all the other things. So their consumption is less impacted. SoFi reported a great earnings. So a very, very strong EPS 8 cents versus 6 cents, up 700% year over year. Net revenue 858 million versus 804 million, up 44 year over year. This is huge. This is 44% beat on the revenue. This is a massive beat. EBITDA is for 249 million, up 81% year over year. A huge, huge beat, EBITDA. And full year 25 guidance, net revenue is 3.375 billion versus the prior range of 3.2 to 3.3 range. It's a beat. EBITDA of 960 million versus prior of 875 to 895 million. The EPS of 31 cents versus estimate of 28 cents. The growth metrics, the fee-based revenue is 377 million, up 72% year over year. Members 11.7 million, up 34% year over year. Products 17.1 million, up 34% year over year. So all across the board, these numbers are unbelievable. Amazing numbers, amazing growth. And you look at financial service revenue up 106% year over year. And the technology platform revenue up 15% year over year. Lending revenue up 30% year over year. Net income up 459% year over year. I believe the you can tell from the revenue perspective, it's a big beat across the board. So great job on SoFi. However, if we look at the stock price of SoFi today, it was up a lot today. It was up like 15%. At one point, it hit $25 intraday and then slowly bleeding back. Now it's back to 22. So basically a 10% reversal. It did a really good job beating the earnings, but typically I don't like this like 10% reversal at the top. I would not be a buyer right now if it pulls back closer to, let's look at the daily. If it pulls back to fill this gap, I would be interested to start some position on SoFi. So if it gets back to 21 to $20, I'll be very interested in SoFi. And we have PayPal. It was a beat on EPS 1.4 versus 1.3 estimate. Net revenue 8.29 billion versus 8.09 billion. That's a beat. The Q3 guidance adjusted EPS is 1.18 to 1.22 versus estimate of 1.21. So roughly the same versus the expected. And the EPS of full year 25 is also roughly the same. So I guess it was not as exciting of a beat meeting expectation, but not enough for the Wall Street to really pump the stock. So PayPal, um, I believe it's down 8% today. I think for some reasons, PayPal just not getting the love from the Wall Street. I am also staying away from PayPal because it's moving really, really slow. Like for the past few quarters, it's beating expectations, but by a very small amount. It just couldn't get a lot of excitement around this company, even though they launched a lot of new products. I do believe their management is trying very hard to execute and launch new product, but just not getting enough love from Wall Street. So I'm staying away from PayPal at this moment. I want to talk about some other news. So Trump on Russia deadline. In 10 days, will put on tariff and secondary sanctions on Russian oil. We see this news came out and basically the US oil jumped like 3% very, very quickly. So this may not be a good sign for the economy as well, because we know a lot of countries relying on Russia oil, and it will not help inflation in any way. The most concerned factor for Fed right now is inflation. If we see oil keep going up, I don't see the Fed cutting interest rate anytime soon. That's another big risk, and we see TLT today up 1.7% almost. So this, my speculation is that we have a lot of economic data coming out tomorrow. I'm not sure this is related to the Russia oil because oil sanction will only push inflation higher. So TLT should go lower because the less likely Fed will cut interest rate. So TLT in theory should go lower after this news come out. However, TLT is up 1.7% today. So my speculation is that tomorrow we have the ADP employment and the GDP data. Those numbers could be very bad, very likely miss expectation. Why would I say that? I know a lot of government officials knew about a lot of the economic data beforehand, like the Treasury Department and the Federal Reserve, because they need those data points to make fiscal policies and monetary policy. So they usually have their hands on those data early. And when someone has data early, and very likely those data get leaked out to someone, right? Like I know that for a fact. Sometimes market will move in advance of the data release because they knew the data before they came out. So I I'm speculating that tomorrow we'll have a uh, very bad economic data in terms of the ADP employment and the GDP. It could be one of those data point, or it could be both of them. I think that's why TLT is up 1.7% today. And we see some sell-off in the market today. SPY is down, finally down 0.3%. It's not a big down day, but we're finally seeing some selling pressure and the volume start to pick up. And the QQQ is down 0.15%. And you see from the QQQ, the volume is actually much higher. You see a much bigger jump in QQQ volume. And the IWM, you also see the volume picking up. It's down 0.57%. And you see the VIX today, very, very rarely. You see a green candle on VIX. So it's actually breaking out of this 15.5 pivot. You can see this 15.5 level it's been holding for quite some time now. First time in a long time for the VIX to break out of 15.5. Now it's trading at $16. And this is not a good sign. Just like I was saying about the TLT and the oil price and the some of the selling pressure on SPY and QQQ, and all of these things points to larger pullback for the rest of the week. And we have a lot of economic data tomorrow, and on Friday we have a lot of earnings next 2 days. I think a lot of volatility is going to coming up. So tomorrow we will have we'll be waiting for the economic data to come out, and we'll wait for the FOMC to see the rate cut expectation. We'll see how that goes. I'll keep you posted on any new thoughts I have with the new data point coming out and the FOMC meeting. That's all for this video. Thank you for watching. Please like and comment and subscribe to my channel, and I'll see you next time. Bye.